Cryptocurrency investing has grown from a niche hobby into a global financial revolution. For beginners, the journey into crypto can seem daunting, filled with unfamiliar terms, volatile markets, and an overwhelming array of options. But with the right knowledge and a strategic plan, investing in crypto can be both exciting and rewarding. This guide will walk you through the essentials and motivate you to take that first step confidently. Why crypto? A revolution in finance. Cryptocurrencies represent a fundamental shift in how money works. Unlike traditional currencies, crypto is decentralized, offering transparency, accessibility, and potential for significant returns. Bitcoin, Ethereum, and other leading cryptocurrencies have outperformed traditional assets over the past decade, attracting investors of all levels. Step 1. Understand the basics before diving in. Familiarize yourself with the foundational concepts. What is cryptocurrency? Digital currency secured by blockchain technology. Examples include Bitcoin, BTC, and Ethereum, ETH. Blockchain technology, a decentralized ledger recording transactions, ensuring transparency and security. Wallets, digital tools for storing cryptocurrencies. Options include hardware wallets, e.g., Ledger, and software wallets, e.g., MetaMask. Step 2. Start small and learn. Investing in crypto doesn't require vast sums of money. Begin with an amount you can afford to lose. Cryptocurrencies are volatile, and losses are possible. Use trusted platforms like Coinbase, Binance, or Kraken for your first purchase. Gradually expand your investment as you gain confidence and knowledge. Step 3. Diversify your portfolio. The adage, "Don't put all your eggs in one basket," is crucial in crypto investing. Top coins. Start with Bitcoin and Ethereum, known for their stability and adoption. Altcoins. Explore promising alternatives like Cardano, ADA, or Solana, Sol, but research thoroughly. Stablecoins. Hold some stablecoins, e.g., USDC or USDT, for liquidity and reduced risk. Step 4. Do your research, DYOR. Before investing in any cryptocurrency, study its fundamentals. White papers. Read the project's goals, technology, and team credentials. Community and partnerships. Strong developer communities and partnerships often indicate potential. Market trends. Use tools like CoinMarketCap or Glassnode to track market performance and on-chain data. Step 5. Develop a strategy. Having a clear investment strategy helps mitigate emotional decision-making. Long-term holding, HODLing. Buy and hold assets with strong potential for growth. Dollar cost averaging, DCA. Invest a fixed amount regularly to reduce the impact of volatility. Active trading. For more experienced investors, trading offers opportunities to capitalize on short-term market movements. Step 6. Manage risks. Crypto investing can be rewarding but is not without risks. Avoid overexposure. Limit crypto investments to a portion of your overall portfolio, e.g., 10 to 20%. Use secure wallets. Protect your assets with reputable wallets and enable two-factor authentication. Beware of scams. Avoid unverified projects and phishing attempts. Stick to trusted platforms. Step 7. Stay informed. The crypto market evolves rapidly. Keep up with trends, news, and regulatory changes. Follow reputable sources like CoinDesk, The Block, and Decrypt. Join communities on Reddit, Discord, or Twitter to stay connected with other investors. Investing in cryptocurrency is more than just a financial decision. It's a step toward embracing innovation and taking control of your financial future. While challenges exist, so do opportunities to learn, grow, and achieve financial independence. As famous investor Warren Buffett once said, risk comes from not knowing what you're doing. By starting small, staying informed, and approaching crypto with curiosity and discipline, you can turn this emerging technology into a cornerstone of your financial strategy.